Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy, and hey, that's me, Larry Steinhouse. Today is Friday, July 15th, and I want to welcome you to the show. We are here live on WWDB Radio, 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. Hey, you can find me on Facebook, LinkedIn, Twitter, True Social, TikTok, and all those other social media sites by just searching Larry Steinhouse. Hey, just a reminder also, if you're watching online, hit that like button. Hit the like button, hit the like button, hit the like button. Let me know you like the show. Hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Hey, you can also leave comments live during the show on YouTube, Facebook, LinkedIn, and Twitter, and please say hi so I know you're watching. A couple people saying hi already. We got Tom and Jane and James. Thanks so much. I appreciate you guys. By the way, if you're commenting from a group and it's not the Money Chat Now fan page, your name may not show up on my dashboard, so please go to Money Chat Now and comment there so I can recognize you. Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class next Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. All right, on today's show, we're going to be talking about, of course, the recap and the update. We're going to be talking about Musk and his SEC troubles. We're going to be talking about Amazon slowing, maybe. And we're going to be talking about Starbucks is learning. You guys are going to enjoy that one. Definitely going to enjoy that one. All right, a couple other people joining us online. We got Ken, and it looks like Royce. All right, so yesterday, it ended up better than I thought it would, but it was still pretty bad for most of the day. The Dow started off down about 450 points and slowly moved up to there and end only down 142 points in the red. That makes a week of all red. The S&P was only down about 11 points, and the NASDAQ actually finished up with Apple moving up about 3 points. The big problem today was, as I mentioned yesterday, when I mentioned it yesterday in the morning, the banks fell short of expectations. JP Morgan Chase shares sank 3.5% after the bank added to reserves for bad loans and halted its share buybacks, signaling a more cautious economic outlook. CEO Jamie Dimon warned that the economy could take a hit from surging inflation. Geopolitical tensions and dwindling consumer confidence is also a worry, and he quoted, "This may happen sometime down the road." So he basically said, hey, bad things are coming, and he's worried. Continuing the trend, Morgan Stanley shares also slipped 0.4% on the back of a sharp decline in investment banking revenue, while Goldman Sachs, which is set to report earnings on Monday, fell 3%. Earnings from big banks continue today, with results from Wells Fargo and Citigroup, which also dropped yesterday, 0.8% and 3%. So we're going to have to see what happens. So I would also bet that we'll see the same results from both Citi and Wells. Those results should be coming up any minute now. The only good news is that maybe Wall Street is now expecting them to be bad, so the market won't overreact when it happens. It's kind of funny because some of the CEOs are telling Wall Street to stop overestimating earnings. Jamie Fahey of Citigroup said, "We think more equity downside is likely, primarily because earnings expectations are too high." Why is Wall Street so crazy? They remind me of the Bitcoin hoodlers. It's time for Wall Street to start to understand this isn't last year anymore, and it isn't the last 12 years anymore. Enough already. It's time for Wall Street to realize that we have a bumbling fool in the White House, and his goal is to destroy business. One of the things that helped the market was when Fed Governor Christopher Waller said he expects to raise the central bank's benchmark interest rate 75 basis points this month, but he's open to a larger move depending on incoming data. I'm not sure if Wall Street was happy because he said it will raise it most likely 75 basis points, or they were happy that he said that it could go as high as 125 basis points. It doesn't make any sense. Sometimes Wall Street just totally baffles me. Yes, I agree that inflation needs to be tamed, but killing the economy is probably not the best way to do it. You know, if you remember, I mentioned that history shows that fiat currencies, like basically the dollar, usually last about 35 years. I also mentioned that most societal unions, like the United States, last about 250 years. Well, now we are almost 50 years into this current fiat currency called the US dollar, and the United States is 246 years old. When people say these are scary times, they might not even realize what I just mentioned. Just to add to that, the stoic look on Powell's face, if you ever watch him speak, may not just be old age. It could also be that he's worried that this fiat currency called the dollar is about to collapse. In history, fiat currencies collapse because of something called hyperinflation. Look, we're not quite there yet, but it's kind of scary. Here, for example, some countries that had their fiat currency collapse had inflation higher than 100% in a matter of hours. Here's the record. Zimbabwe's currency hit a peak in November 2008, reaching a monthly inflation rate of approximately, you ready? 79 billion percent. 79 billion percent inflation. And you guys are worried about, 9.1%? 79 billion percent. It would be like if you ordered a cup of coffee and you paid $10 for it, but the guy who is being served at the counter just as you finished that coffee, he is now paying $20 for the same cup of coffee, and tomorrow when you came back for another cup, it would be over $150. That's some serious inflation. Other countries like Greece, Yugoslavia, and even Germany have had some of the highest hyperinflations in history. So it may just be that Powell is actually worried about this. I don't think it's going to get that bad, at least not this time around, but it's going to be ugly for sure. Here is a thinker for you. Just think about this. If the current inflation rate is 9.1%, what do you think will reach 10% first? Inflation or Biden's approval rating? Which will hit 10% first? Inflation or Biden's approval rating? All right, let's take a look at what the futures look like right now. Right now, we've got the Dow is up 160. We got the S&P is up about 18.5, and the NASDAQ is up 70. Not bad at all. Hey, a couple of people joining us online that I want to say hello to. We've got quite a few people actually. We got Glenn and Seth, my brother Seth. Thanks, man. We got Betsy. We got Michael. We got Tom. We got Mark, and we got Michael, of course, saying LGB, which stands for Let's Go Brandon. He's just doing such a great job, isn't he? Let's talk about Musk and the SEC. So it appears that Elon Musk once again is in trouble with the SEC over tweets. The ironic part is the tweet over the purchase. The tweet is over the purchase of buying Twitter. Look, you may remember a couple of years ago when Musk got himself in trouble when he was so frustrated over the short sales of Tesla that he tweeted that he was going to take Tesla private. He tweeted that he was going to buy the company for $420 a share. That tweet drove the price of the stock almost 25% in a matter of minutes. A court filing stated that a judge ruled that Tesla CEO Elon Musk knowingly made false statements when he tweeted about the takeover deal from the company in 2018. After that tweet, the SEC charged Musk with a civil securities fraud. I remember watching the stock and the market actually halting the trading while it all settled down. So as soon as it happened, as soon as he tweeted it, the market literally just halted Tesla stock. A judge ruled that Musk did not have the funds to take the company private and could not meet the obligation. And basically the tweet skyrocketed the stock and it caused many to lose money that day. Oh yeah, some people made money, but the short sellers that Musk probably wanted to punish were hit with some serious margin calls. Some who bought the top of the market that day also, based on the rumor, also lost when the stock tumbled the next few days. Officially, the financial regulators charged Tesla and Musk with making false and misleading statements to investors when he tweeted about the purchase of Tesla, and the date was, if you remember, August 7, 2018. In a settlement with the SEC, Musk agreed to step down as chairman of Tesla and pay a $20 million fine. That's like us paying a $20 fine to him. Tesla also agreed to pay a separate $20 million penalty. According to the SEC said the charge and the fine against Tesla is for failing to require disclosure controls and procedures relating to Musk's tweets. So basically, Tesla now has to approve Musk's tweets. So that was the end of that. Until, of course, now. As I mentioned a few weeks ago, Musk also tweeted about Dogecoin, and he also manipulated the price of that a few times. But now we have the Twitter deal, and the SEC is back to finding Musk tweeting and manipulating the stock again. According to the Wall Street Journal, Elon Musk is facing scrutiny from securities regulators over whether he properly disclosed his intention to terminate his $44 billion deal to buy Twitter. A few weeks ago, Musk tweeted. A few weeks ago, Musk tweeted, "The deal cannot move forward until the company is clearer about how many of its accounts are fake." This tweet came before Musk said he was going to seek to abandon the deal, when his attorney wrote a letter to the board of directors on Twitter saying that he was canceling the purchase because of this. So now the SEC is discussing whether the tweet was basically a tell that the deal was going bad, and whether it was a violation of both SEC rules and a violation of Musk's agreement with the SEC to not screw with investors as he's done before. Well, here's something that most of you have already forgotten. Twitter all started, this whole Twitter thing with Musk all started when Musk bought 9.2% of the company a few months ago. His tweet may be a violation because of this ownership, not because he was trying to buy Twitter, but because he owns 9.2% of the company. There is something called a Schedule 13D filing, which all owners of more than 5% of a company are supposed to file whenever they're making a material statement about a company that they own anything more than 5% stake in. In this case, Musk tweeted the deal cannot move forward until the company is clearer about how many of its accounts are fake, and that would be a material statement about the health of the company. If not at least the health of the company, certainly the health of the stock price. The SEC staff said that on June 2nd, that when material change to Musk's plans to buy Twitter had occurred, then he had to amend his Schedule 13D to reflect those changes before he tweeted it, whatever. Apparently, this should have been done, and it wasn't done, and the SEC has written to Musk's attorney about the matter. So far, Musk's attorneys have not even responded. So once again, Musk is in trouble for his big mouth tweets, and we're going to need a ruling on this, and when it, basically when it goes to court. But if you remember, the biggest takeaway from this report is that Musk still owns 9.2% of Twitter. He is a majority stockholder. He is still very powerful with even a small percentage of ownership. Twitter stock may be a bargain at the 35-ish price range that it is now, and if it continues, look, I think, first of all, this matter isn't finished yet, and although it makes good stories about Musk and Twitter, we probably won't see a definite answer for the deal in months. So go buy Twitter stock. It's a great play. All right, let's take a break here, and if you'd like to be a sponsor on this show, please reach out to me, and I'll tell you how to become a sponsor. We'll see you guys in a minute.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock options sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829. That's 866-424-2829. Hey, I want to thank you all for listening on WWDB Radio 860 AM in Philadelphia. And of course, if you're watching online, please hit that share button so you can help your friends learn how to make more money. Hit that like button. Let me know you enjoyed the show. And you can also leave comments on Facebook, Twitter, LinkedIn, and YouTube, and I'll try to respond to them. All right, everybody, go over to the share button and click that share button. Share it on your page. Share it in groups. Come on now. You know this show is good. All right, so far we've been talking about the recap and the update, and right now I believe the Dow is still moving up. It's up 132, not as high as it was before. The S&P is up 14 and the NASDAQ is up 52. We talked about Musk and his SEC. We're now going to be talking about Amazon and Starbucks. So let's talk about that in a little while. And of course, then we'll be talking about today's picks and plays. But did you guys hit that like button yet? Come on, hit that share button. Don't forget to leave me comments on Facebook, LinkedIn, YouTube. And if you're listening on WWDB Radio, be sure and set a preset to this station and listen every day. And when you get home, look up Money Chat Now on Facebook and let me know what you think. Hey, by the way, did you guys order my new book, Money Hacks? Come on, you can have it by the end of the month. That's right, the physical book is here and ready for your order. Go to wherever fine books are sold, order the book, Money Hacks by Larry Steinhouse. I promise you're going to learn something even before you finish the first chapter. All right, let's get into the second half. All right, Amazon. Hey, have you heard about this company called Amazon? Hey, you ever hear of it? I know, it's got these weird logo. It got some kind of arrow, I don't know. Anyway, it could be, the arrow could even be Jeff Bezos. Never mind. All right, have you heard about like what's going on with Amazon? Look, it's even, I even bet you get packages and packages from them. Some of you even hate the country. Yeah, some of you even hate the company for reasons like they're a monopoly, they're anti-union, or you heard something like they have poor work environment, and others are just annoyed because they have everything, and you may feel that they're putting small businesses out of business. Of course, most of it's true, but you still order, and you still have the blue truck pickup, you still have the blue truck pull up and deliver your goods. Well, Amazon has what's called a private label division. This division has about 243,000 products across 45 different house brands as of 2020. And this is the stuff, made like batteries or cables or cleaning fluids or others that Amazon that has the Amazon name on them. I'm sure you've seen them, and probably like me, you have them. Even my lav microphone that I'm using right now has Amazon branded batteries in it. So if my audio cuts out, you can blame Amazon instead of the guy at WWDB. This time it'd be Amazon's fault. All right, well, there's been some complaints by sellers of name brand products on Amazon to drop this line because Amazon name products are competing with the companies that list their products on Amazon. Have you noticed that when you're looking for an item, you'll find the comparison of that item to an Amazon labeled product, which is a lot cheaper? So now Amazon has decided also to cut back on the sale of many of the company labeled products. But not because of the complaints from retailers. Why would they do that? But because of slowing sales of these products. Over the past 6 months, Amazon leadership instructed its private label team to slash the list of items and not reorder many of them. We saw that Amazon had its first quarter results that disappointed investors. Amazon also forecasted weaker than expected sales for the second quarter. So the stock price, if you remember, tumbled about 10% since then and is staying down in that range. It appears that Amazon is no different than many of the other companies out there that are simply struggling with this new economy and the fears of the upcoming recession. Amazon, to me, is a great stock play, especially after the recent split. That puts the stock price between the 100 and 110 range, and this is going to be over a short time. It's going to move north, and it's going to do really, really well. But just like the rest of the market, the fears are keeping it down. The next time you look for an item on Amazon, see if the comparable Amazon item still comes up there. All right, let's go to another topic, which is kind of interesting, too. Let's talk about Starbucks. Well, it appears that Starbucks is beginning to understand the difference between woke and waking up. Starbucks, known for their $5 cup of regular coffee and their own language when naming drinks, has been part of the radical left for a while, but is now waking up. In the midst of all the poor leadership in several states and cities, Starbucks has decided to close several stores because of what they are calling safety concerns for their employees. With sky-high crimes in cities like Philadelphia, because of soft on-crime policies, criminals just walk into stores like Starbucks and do as they please to the store. They steal, they destroy, whatever, right? The employees and even the customers get abused by some of these people. Hey, look, if you search on Google, the terms put in this search in Google, recent Starbucks robberies, you'll find pages of robbery incidents, everything from rude customers also, to even people going amok, shootings inside and outside of Starbucks stores. Look, if you're a Starbucks fan and you go to Starbucks every morning in your suburban location, don't worry, Everything's fine there. The only thing you might find is that when you accidentally bump into someone and say, "Excuse me, ma'am," you might get into an argument about their gender, but that's about it. Of the 16 stores closing, the location areas that are closing are in Greater Los Angeles, also in Greater Seattle, Portland, Oregon, one in Philadelphia, and one in D.C. Hey, they all sound like they have something in common. Yep, Democrat weak on crime leadership. But hold on a second. Democrat leadership. Think about this. Maybe Starbucks has also realized that these are the most likely areas for these stores to unionize. Hey, if you recall, I told a story about a unionized store that closed recently over a grease trap issue where the employees refused to clean the grease trap because as union workers, they have felt that it was beneath them to, do their job. So Starbucks closed the store, and the unionized employees all met for a union meeting at the unemployment office. So I wonder how much of this is the safety issue for the employee or how much of it is a safety issue for the company. All right, look, the best part is that either reason makes the conservatives happy because they can now use it for their advantage. Listen, make sure you tell all your friends about the fact that crime is so bad in these Democrat-run cities that Starbucks is closing stores. Or if you prefer, tell all your friends who want to ruin free enterprise by unionizing that Starbucks is closing stores to avoid unions from running them. Either way, it's a great message to get out and vote red this coming election. All right, let's take a break here, and when we get back, we're going to be discussing some of the plays of the day, and it might be something you want to hear. We'll see you guys in a minute. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is because everything you think you know about money is wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. Hey, I want to remind you guys that this show is now open to sponsorship. I've sold hundreds of books to people who listen to and watch this show every day, and we have raving fans, and if you'd like to advertise your product on this show, please reach out and let me know. Maybe you have a product that will help people who invest in properties, maybe a product that's a financial product, or maybe just a product that you want to let people know about. So please reach out, let me know, and if you want to, you can become a sponsor of this show, and we'd love to have you. All right, so far, of course, let's take a look at the futures. Right now, the futures are pretty much the same. The Dow is up 136, the S&P is up 14, and the NASDAQ is up 52. Hey, we talked about Elon Musk and his troubles. We talked about Amazon slowing, and everybody got a kick out of the Starbucks thing. It's the truth, man. It's the truth. Keep it coming. You want to keep those Democrat leaders in there? Well, you're not going to have a Starbucks. Ha-ha. All right, coming up, of course, we have today's picks and plays, but did you guys hit that like button? Did you guys hit that share button? Tell all your friends about this show. Let them know it's both entertaining and educational. Please share it now on your page or in groups that you feel will also enjoy the show. Have them like the Money Chat Now fan page so they can get notified of the show every day. And you can also leave comments on Facebook, Twitter, and YouTube. But if you're going to leave comments, tag some of your friends in the comment section. So if you're going to say some really great things like Michael says, go work, go woke, go broke, tag a friend. If Seth says, wake up Starbucks, tag a friend. All right, and of course, if you're listening on WWDB Radio, set one of your presets to this channel and listen every day at 7:30 for all you need to know about the politics behind the stock market and for some great entertainment. Let's talk about what's going on. All right, let's get into today and what will probably happen. Look, if the earnings report on Wells Fargo and Citi have not been announced yet, they will be soon. The good news about the bad news, that will probably be reported is that yesterday's bad news of the banks reporting yesterday is now absorbed into the minds of investors already. That means if the reports of the banks today are bad, it's basically expected. If they're good, and that's highly unlikely, it will move the market up anyway. I do believe we're going to have a good day today and the market will move up. Here are some stocks that I believe will continue to move forward. I'm going to tell you, Meta is a stock play that's been beaten down and is relatively cheap right now. As a stock, this company is definitely going to grow into the future, and it makes a good buy and hold play. I'm kind of skeptical about the stock option. The time value is too high, it's just too expensive, but I'm skeptical at least for now. I need another 2 months of the price ranging in this area of 155 to 170 before I can really see the pattern. I still like the dividend-paying stocks like AT&T, and if Apple falls below 145, I think it's a good options play into the end of the month. Let's take a quick look real quick, and before we go on, right now we've got the Dow is still up 132, we got the S&P up 13, almost 14, and the NASDAQ up 50. So let's talk about crypto real quick. Bitcoin is hovering above the 20,000 mark, and it's now about 20,700, and Ethereum is back on the edge of 1,200. Look, I keep saying these things are going to move down. They're kind of just sitting there right now, so we'll see. I got to tell you, gold and silver are so low, I don't even want to look at them anymore. What's going on with gold and silver? This is terrible. Must be because, I keep buying it. Oh, I know what happened. I turned my auto ship off. So because I turned my auto ship off, I'm not buying it at the peak anymore. All right, Treasury bonds are still hovering below 3%, and that's not moving much. Oil is also falling rapidly and is now about $96 a barrel, and the average gas price moved down to $4.57 a gallon. Yay, $4.57 a gallon. Let's go, Brandon. Hey, I want to thank all the listeners on WWDB Radio 860 AM in Philadelphia. I want to thank you for your continued support. And of course, if you're enjoying the show, please reach out and let me know. My name is Larry Steinhouse. I am the host of Money Chat Now and the CEO of Investor Schooling. And if you want to contact me directly, just contact me directly by going to contactlarry.com. That's contactlarry.com, and you can find out how to reach me there. You can even make an appointment with me if you'd like. Hey, don't forget, from time to time, I own some of the assets and options discussed in this show, and the opinions discussed on this show are solely mine, and no one has asked me to discuss them. Hey, you guys doing anything really good this weekend? Make sure you have a great weekend. I might be at a car show this weekend. Have a great weekend, and, of course, make it a profitable day.